As we look ahead to 2025 and beyond, one of the most intriguing topics on the horizon is the potential impact of President Trump's 47th presidency on the real estate market. With former President Donald Trump re-entering the political arena, his latest policies are set to reshape various sectors, including real estate. But what exactly does President Trump's presidency entail, and how could it influence your investments in the coming years? In this video, we'll dive into the key components of President Trump's new policies, focusing on tax reforms, deregulation efforts, and infrastructure initiatives. These changes could create a ripple effect throughout the real estate landscape, affecting everything from property values to investment opportunities. For instance, if tax incentives for real estate investors are reinstated, we could see a surge in demand for residential and commercial properties, driving prices up and creating a competitive market. But it's not just about potential gains. Understanding the risks is equally important. With deregulation, there may be concerns about environmental impacts and housing quality, which could influence buyer sentiment. So, whether you're a seasoned investor or just starting out, it's crucial to stay informed about these developments. By the end of this video, you'll have a clearer picture of how President Trump could shape the real estate market and what it means for your investment strategy. Let's explore these changes together and uncover the opportunities and challenges that lie ahead. Under President Trump, several key policies have been introduced that directly impact the real estate market, focusing on taxation zoning and housing regulations. One of the most significant changes is the proposed tax reform aimed at incentivizing real estate investments. By offering tax breaks for property developers and investors, the administration hopes to stimulate construction and renovation projects, ultimately boosting the housing supply and making homeownership more accessible. In addition to tax reforms, zoning policies have also been re-evaluated. The President Trump administration is advocating for more flexible zoning regulations, which would allow for higher density developments in urban areas. This shift aims to address the ongoing housing shortage by encouraging the construction of multifamily units and mixed-use developments, catering to the growing demand for affordable housing options. However, these policies are not without controversy. Critics argue that the deregulation of zoning laws could lead to overdevelopment and strain local infrastructure, potentially diminishing the quality of life in certain neighborhoods. Furthermore, the tax incentives may disproportionately benefit wealthier investors, raising concerns about equity and housing access. As these policies unfold, public perception will play a crucial role in their success. While some view these changes as a necessary step toward revitalizing the real estate market, others fear the long-term consequences of deregulation and the potential for increased inequality. Understanding these dynamics will be essential for anyone looking to navigate the evolving landscape of real estate in the coming years. Looking ahead, several trends are anticipated to shape the real estate market. From the rise of smart homes and sustainable building practices to the increasing importance of remote work in determining residential choices, the landscape is set to evolve rapidly. Staying informed about these trends will be crucial for investors, developers, and homeowners alike. As we anticipate the implementation of President Trump policies, several key trends are expected to emerge in the real estate market. One of the most significant shifts could be in property values, particularly in urban areas where zoning reforms are likely to encourage higher density developments. As more multifamily units and mixed-use properties come to market, we may see an increase in supply that could stabilize or even lower prices in some regions, making housing more affordable for buyers. On the other hand, the commercial real estate sector may experience a different trajectory. With tax incentives aimed at stimulating investment, we could see a surge in demand for commercial properties, especially in sectors like retail and office spaces that have struggled in recent years. Investors may be more inclined to take risks on new developments, anticipating that the favorable tax environment will yield substantial returns. Investor sentiment is another critical factor to consider. As the market adjusts to these new policies, we may witness a shift in how investors approach real estate. Those who are optimistic about the potential for growth may flock to urban areas, while others may adopt a more cautious stance, weighing the risks associated with deregulation and potential overdevelopment. Overall, the landscape of real estate post-President Trump is poised for transformation. By understanding these anticipated trends, investors and homeowners alike can better navigate the evolving market and make informed decisions about their real estate investments in the years to come. The implementation of President Trump's policies is set to significantly affect both homebuyers and sellers in the real estate market. One of the most immediate changes could be in mortgage rates and financing options. With potential tax incentives for lenders and a push for deregulation, we may see more competitive mortgage products entering the market. This could lead to lower interest rates, making homeownership more accessible for first-time buyers and those looking to upgrade their living situations. However, the impact of new regulations on buyer confidence cannot be overlooked. If the policies are perceived as beneficial, we could see an uptick in buyer enthusiasm, encouraging more individuals to enter the market. Conversely, if concerns about overdevelopment and housing quality arise, potential buyers may hesitate, fearing that the market could become unstable. This uncertainty could lead to a more cautious approach, where buyers take their time to evaluate properties before making commitments. For sellers, the landscape will also shift. With an influx of new properties due to relaxed zoning regulations, competition may intensify. Sellers might need to adjust their pricing strategies to remain competitive in a market that could see increased inventory. Additionally, if buyer confidence rises, sellers may find themselves in a favorable position to negotiate better deals, especially if demand outpaces supply in certain areas. In summary, the effects of President Trump's policies on home buyers and sellers will be multifaceted, influencing everything from financing options to market dynamics. Understanding these changes will be crucial for anyone looking to navigate the evolving real estate landscape. Long-term implications for investment strategies. As the President Trump administration policies take shape, the long-term implications for real estate investment strategies will be significant. Investors will need to adapt their approaches to align with the new regulatory environment and market dynamics. For instance, with potential tax incentives aimed at stimulating development, investors may want to focus on properties that can benefit from these breaks, such as multifamily units or commercial spaces in urban areas. This shift could lead to a greater emphasis on identifying properties that not only meet current demand, but also align with the evolving policy landscape. However, along with these opportunities come inherent risks. The deregulation of zoning laws, while intended to boost supply, could lead to overdevelopment in certain markets, potentially saturating the market and driving down property values. Investors must be vigilant in assessing local market conditions and understanding how these changes could impact their portfolios. Moreover, staying informed about ongoing policy changes will be crucial for successful real estate investment. As the political landscape evolves, so too will the regulations that govern the market. Investors who actively monitor these developments will be better positioned to make informed decisions, whether that means capitalizing on new opportunities or mitigating risks associated with market fluctuations. In conclusion, the long-term effects of these policies on real estate investment will require a proactive and adaptable approach. By understanding the implications of these changes, investors can navigate the evolving landscape and position themselves for success in the years to come. To wrap things up, staying informed and adaptable is key in the ever-changing world of real estate investment. So, keep an eye on policy changes, understand their impact, and be ready to act. Your future success depends on the steps you take today. Thank you for joining us and happy investing. In summary, the effect of President Trump on the real estate market is poised to bring about significant changes that both homebuyers and investors need to understand. Key policies related to taxation, zoning, and housing regulations are set to reshape the landscape, potentially leading to shifts in property values and demand. As we discussed, The introduction of tax incentives could stimulate investment, while relaxed zoning laws may increase competition among sellers and influence buyer confidence. For viewers, the key takeaway is to remain informed about these developments and consider how they may impact your real estate decisions. Whether you're a first-time homebuyer, a seasoned investor, or someone looking to sell, understanding the implications of these policies will be crucial for navigating the evolving market. As we move forward, it's essential to keep an eye on how these changes unfold and adapt your strategies accordingly. The real estate market is dynamic, and being proactive can help you seize opportunities while mitigating risks. If you found this video insightful, we encourage you to subscribe to our channel for more updates and analysis on real estate trends. Don't forget to like and share this video with friends and family who may also benefit from understanding the impact of President Trump on the market. Together, we can stay informed and make smarter real estate decisions in the years to come. Thank you for watching.